It's mid-February, but I haven't talked to you for a while, and thank you so much for joining us, Pipzar. Everyone,
Hey,
Blake
thanks for having me.
Morrow is with us now at Pipzar, host of the Morning Edge, an excellent show to really have your finger on the pulse of the markets. So, Blake, what are you thinking in here? Lots happened since you and I talked. We had the worst start in stock market history. Even weaker than we had in 07, 08, weaker than the 30s. And then recently we took out a lot of the shorts, a lot of the Euro bears looking for parity, cleaning out stops over 109.80, 110.60. So I'm very interested in your views and what you're thinking about here in 2016, my friend.
All right. Well, thanks for having me, Dale. First of all, I want to commend you on on a great job that you do for the whole community, the currency trading community, and you always bring on some great guests, and I'm very honored to always be a part of it every time you ask me to be here. So thank you very much. Now, as far as the market goes, I'm actually the least exposed to the market that I have been in the last couple of months due to where we're at right now. I've actually reduced.
That's a statement in itself because I know you, Blake, and when you see opportunity, you have to hold yourself back from being aggressive. You're the antithesis of risk aversion. So you must not see much to do, and there's a lot of markets that look like they could go either way or maybe both ways, one way first and another way second. And it takes, I think, wisdom to say I don't know. So here I'm going to be wise. A lot of things that I'm looking at, I don't know either. I saw this reaction coming in Euro back down towards 111, 110.80. But people are asking me, is this an important low in the dollar? Is this a bear market rally in the dollar? And I can't give an all clear in the dollar index until I see it back over 98, 98.50.
Yeah, the dollar. Well, I think there's a few things that are affecting the dollar, and first of all, I'd like to say that I'm actually very, very neutral to the dollar, and when I say that, that's coming from somebody who'd been a major dollar bull for the last couple of years, and
Right.
taking a step back, I had told everybody I'm very neutral to the dollar, but I had been playing the dollar on the short side for the last several weeks exclusively, and that doesn't necessarily mean I've been long the euro either or long the cable. I've been short the dollar yen, I've been shorting the dollar Canadian, and I've been shorting the dollar Mexican peso, US dollar Norwegian krona, but I've been playing those for different reasons. The pickup in risk aversion, the market the equity market's trying to bottom the last week has prompted me to short the dollar peso. The dollar Canadian, when it was trading at 142 to 144, I got aggressively short that pair and long the Canadian currency, but that was mostly due to crude oil. And but I guess
it sounded like it was crude oil, especially when you look at the peso and stuff. And I've been taking heat and accumulating, and I caught the first pop to 34, 35, and then I recommitted maybe a little early. I'm still long, Blake. I think if we clear today's highs in crude, that we're on our way to $38 or so. So I maintain. But I'm also open to that. It could be a sea of tears if we wash out to new lows again too. But I just think too many bears. I don't think they've been taken out, and they won't be taken out till we close back over what a lot of people are saying was wave 4 at 34.80.
I'm not a huge Elliott waiver, and most people that trade with me, alongside me, understand my analysis, know that I'm not. But I look at crude oil, and I think crude oil is trying to form some sort of low. But I'm also not in the camp, Dale, that the fundamentals have changed so much that we can really reach too high of prices. I think $38 personally, by you throwing out that number, I really don't even see that as too feasible right now without, you know, some fundamental reasons why crude oil should reach those prices. And you know, I know we've talked in the past about crude oil and about how it's, I believe it's a broken commodity. I think it's a dirty commodity. I think it's going to be, you know, universally shunned. It's kind of like the coal industry, if you will. And I know people that are, you know, that really rely on crude oil probably don't want to hear me say this, but you know, I say things that people don't want to hear all the time. But I've had the same feelings for a long time, and I think the way the technology is has you know, shifted in the automobile industry. I believe that that, you know, the extra crude oil that we've seen.
Okay, Blake, get out of your Tesla and hug a tree.
Hey, you know, hey, but you have to admit, the world is changing. And Dale, you're an American. I'm an American. I live in the United States. I drive V8 vehicles, and I'll tell you, what has happened. Yeah, and what has happened over the last 10 years is you've seen just gas mileage improve because technology is improving. You know, things are getting you know, from a gas guzzling, quote unquote gas guzzling standpoint, the way automobiles have been made and the technology that's behind them. I mean, the efficiency is just so much greater now. And I think, you know, 10 or 15 years from now or 20 years from now, we'll have you know, cars that are very much a hybrid type of technology and improved, you know, dirty fuel technology, where we're going to have, you know, cars that get, you know, 60, 70, 80 miles per gallon. I don't think that's going to be uncommon, and I think that's going to be more of the mainstream 20 years from now. And as we find, you know, we realize that peak oil is we're nowhere near peak oil, and we realize that there's more ways to extract crude out of the ground, and we've got a lot of different producers coming online. I think it's just going to be a commodity that's shunned for a while. And so anyway, whether we hit 38 or 40 or 35, you know, it's really hard to make that judgment call right now, but I do think that crude is a sell on rally type of commodity, which therefore, you know, also puts me in the camp that the dollar Canadian, for example, or the US dollar Norwegian krona, those are currencies that you actually want to buy on a pullback. And I know you like to see charts, Dale, so do you want me to show you what I'm looking at? Okay.
Yeah, and then, you know, after the interview, just for your own perusement, you pull up the daily chart of crude, cover up the title, and look at a falling wedge. And forget that it's crude. Forget that it's crude, and you have these biases about crude. And technically, I have to hold my nose when I know about the fundamentals in crude too. But when I look at the technical pattern, there's something brewing that no one is even really talking about. But I am interested in, I'm interested in talking about what you're seeing, not what I'm seeing.
Sure,
I interview myself all the time.
Well, as far as like the dollar Canadian goes, this was you know, myself and many traders, we got aggressively short when we were trading up at this 142 to 144 range, and it was probably one of my better trades of this year. Between that and being short the dollar yen following the BOJ at the 121 level, that was a real slam dunk over the last couple of weeks. But I still have to look at, you know, the longer term technicals of the dollar Canadian, and I still believe that you can see it right here, and I'll have to draw it just with my cursor. I don't have the same drawing tools that I normally do, but we have this big cup and handle pattern, and you can see the you know, this is the cup. Okay, the handle was formed back here in early 2015, and the target for this cup and handle pattern, you can see it's a longer term cup and handle pattern. The target from the bottom of the handle, okay, on out, takes us to about 155. Yeah, it's about 153, 155, somewhere in that neighborhood. I do think that that's a doable price, and like I said, if I believe, which I do, if I believe that crude oil doesn't have much further to go to the upside, and I may be right or wrong. I don't know. I mean, we can look at the crude chart.
No, I mean, there's other analysts that I respect that are talking about 158 Canada. My
Yeah,
question is here: do you ever see cup and handle patterns retrace to the breakout of where the handle broke out?
yeah, it definitely can. It definitely can. I mean, it's just kind of like with the current development in the dollar index. I told people that we have this big flag pattern that's trying to play out, but it's not going to be pretty. It's going to be real ugly and really choppy over the next, over the next couple of years. The easy money was made in the dollar index in 2014 and 2015. 2016, 2017, it's going to be more of a disaster, and it really, there's so many things that have to come into place in order for that to work out. And it's the same thing here with like the dollar Canadian. I do see it is moving higher. I've just this morning, we were looking at this 38% retracement. You can see I have it highlighted in yellow. I've had this highlighted in yellow the last 2 weeks actually, and this upsloping trend line intersects with the dollar Canadian down around the 136 level approximately. And the question is, and the question I'm asking myself now is, did I miss it? Did I miss my long opportunity, which may have presented itself even overnight? And I'm not, I'm not one that's going to chase it higher, but I'm also very patient, and I will wait for it to come down. And if it doesn't come down and it leaves without me, so be it. As I tell traders all the time, this, Dale, and I think you'd probably agree. I'd rather miss a trade. I'd rather regret missing a trade than regret being in a trade. So, I don't mind missing trades. It's never fun when I say, oh God, I was looking to buy the dollar Canadian down here at 136 and it got to 136.50 and turned around. I miss
every day, but there's always another trade. Let me ask you this about Canada. Sure. Is it possible, since this first bounce that we had from your yellow area was pretty weak? It wasn't even. It was maybe 38% back of the decline, and that was after a $5 decline in crude oil. All we got was a 38% retrace, and to me that looks incomplete. That maybe we still recover back to 141, 142, 50%, 61.8, and then it rolls over again.
It's possible. I mean, that's obviously going to rely on crude, and the thing, I have to look at the Canadian. I've noticed divergences, whether it was a month ago when crude oil was done going down, okay, but the dollar Canadian kept going higher. That was a big divergence in the Canadian currency. But what we've seen recently, as you just pointed out, is we've seen a big bounce in crude, and the dollar Canadian really hasn't done a whole lot, which suggests to me if crude continues to bounce, the dollar Canadian could break through this low. And me personally, I don't mind buying it cheaper. I think when we trade and we take positions in the market, it's all about risk reward at that point in time. And so when I look at buying it at 136, I know my risk is very low. I mean, it's maybe about 100 pips lower, but my reward is back up into the 140. So you might risk 100 pips to make 200, 300, 400 pips to the upside. I can deal with that. I can deal with a loss going into that that type of setup. But I will not ignore the fact that if we do break through 136 and we break through this blue trend line that you see right here, we could obviously trade back down towards the 130s again, which I would be just as attracted buying the U.S. dollar Canadian down at those levels as well. One of the wild cards right now, Dale, is the euro dollar, and frankly, between myself and Paul Franco, who is SPZ trader, many people know who he is. We were looking for this. Yeah, but Paulie, we were looking for a breakout before we broke this yellow trend line, and once it did, it really changed my intermediate view of the dollar. It turned me from a dollar bull to a more of a kind of a dollar neutral, if you will. Yeah. And so, and we played it really well to the short side last week when we challenged the underside of the trend line.
I had the same line. It was like a back test of the breakdown on the daily.
Exactly, and then you complement it with a Gartley. We had a nice Gartley pattern. So we had a reversal last week.
You also had a pinker 3 drive to a top formation.
Oh, pinker 3 to a drive to a top. I don't even know what that one is. I think
they call me, buddy.
I missed that. I missed that one in the
Mr. 3 drive.
Technical analysis Bible of stock trend that I've so aptly read over the years. But anyway, that move right there was it was pretty key on Thursday. I tweeted that the euro's probably done going up for the week when we hit there, and but what we've done is we've basically just put ourselves in a neutral territory, and I think the euro dollar can bounce. I think the the dollar can continue to come down a little bit, but I think the dollar Canadian is going to be more influenced by what's happening in crude, and I think the move overnight really suggests that the market was very unimpressed with what OPEC did and the comments that were made, and so that's, as crude comes down, the Canadian dollar is going to have a very difficult time building any strength when that's happening. Now, one other thing that I wanted to point out, Dale.
If you go back to that Euro chart, it's an interesting look at something I wasn't considering. That trend line break that you have, and it looks like a big triangle, and
yes.
and it could maybe pull back if the dollar has some legs. Maybe it pulls back to that trend line break, just like it did before it came off.
Right here.
It's around the 109 level, 108 and a half.
Yeah, 108, 109, and that's if the dollar can gain some strength. But do you know what my biggest problem with the dollar right now is?
The S&Ps.
No, it's actually gold.
Oh yeah.
Gold right now is my biggest. I think the biggest thorn, or the biggest thorn in the dollar side right now. And this is our analysis of. See,
I have a thorn in my side. Go ahead.
Well, we had this, speaking of cup and handles, we had this really nice gold cup, very shallow handle. It was a very small handle before it broke. But what's interesting about what gold's done the last couple of days is, I put this yellow box here as kind of like my buy zone. Yeah. In gold, not because I trade gold to the upside, but it obviously influences the way I'm going to trade the currency market. But I figured that gold was going to be supported here, and it was. This is I drew this out yesterday for some of our traders, and we came right down to support, bounced off of there, and if gold continues to show some strength here, that's gonna weigh on the dollar. So again, this is where. I go back to the beginning of our conversation, Dale. This is the lightest my book has been for the year, and my positions in the market right now are cross rates. I'm looking at the dollar, and frankly, I don't have a good feeling on what the dollar is going to do. The dollar yen's a different story. I trade that one a little differently, and I can cover that because I was just short yesterday and I covered it this morning, and I'll show you why I'm playing it or how I'm playing that. But gold really has me worried about any type of longer term dollar strength that we're going to have as long as gold continues to hold this breakout point, and you can see this yellow trend line that I have drawn. I mean, you're going from beginning of 2013 all the way down. Well, we're holding it, and as long as we continue to hold,
we broke out around 1140 on that shallower blue line. Right?
Yeah, this was a descending wedge, and they didn't build the apex that well, but still, we broke 1140, 1150 here, and I mean, you're talking about a $100 plus rally in gold, which is huge. I mean,
just as an aside, the crude looks like that.
Oh, okay. Well,
same thing when you look at the daily later. But here's what I'm thinking, and maybe it's wishful thinking because of how I want to position myself, because I missed this pop in gold. I had been pounding the table that gold shares were not making new lows while gold was, and they never got cheap enough, so I watched it. But I'm thinking that if the euro could close back under 108, the first danger sign I think is 110.60 and then 109.80, that if we got one more high in the Dixie, which a lot of people aren't even looking for anymore, eke out 102, and we needed over 98.5 for that to happen, that you could get a wave 2 pullback in gold. While the dollar's making one more high, gold pulls back and puts in a higher low. And then the first wave down in the dollar is wave 3 up in gold. Just a thought.
That and that very well could be, especially if you get that type of divergence. That's a good playbook. And you know what, Dale, I like the fact that you're developing some sort of plan, and that's what you're setting a great example for other traders, which you develop a plan when you're trading. Whether your plan comes to fruition or not is not the point, because I can tell you I plan out a lot of trades, and a lot of trades just don't work out the way that I had hoped they were going to work out.
The
But if
key,
you have
though, buddy, and I appreciate the compliment, the key is that when it does manifest, that you're ready to execute because it's what you've been laying back for. And you're not doing the analysis on the fly at that time, you're executing.
That's exactly right, and that and that's going to go along with, and I see what you're talking about in crude, and whether you draw it like you want to draw it like this or that, or however you want to draw this descending wedge. It is a big descending wedge. I guess my question is, when I look at crude, when you have a descending wedge like this, the apex is not. It could be complete at this point, but it could still tighten, which means that we could make another low. We could drop towards the mid-20s before rallying. So obviously and
I'm prepared for it, and you make a great point, because we only have 2 drives here, and I was looking at that this week, that perhaps we could have one more drive,
and we might, and I was just going to say, and we might, and that's why a lot of people get let down when they think that there's a rally coming, and then you see this type of of candle forming today, shooting star, or just pin bar, or whatever you want to call it, but that type of reversal candle could lead us right to new lows, and it might be a brief new low. And if you want to play a formation like this, you just want to buy every new low dip that you get, and hopefully at some point you get the actual reversal, whether it's
you get a throw over, or you get a throw under where it breaks under wedge lines or above wedge lines, and really which is kind of what it did if you anchor it off the low in August. Take the same lows you have in February and move the bottom line up to the August low, and we did have a throw under of that wedge, and that could happen again. So
and that's probably that is probably one of the situations that is more realistic, especially when you don't have, again, when you're looking for a move in the market, you look for a fundamental backdrop that's going to match the reasons why you're going long or short. And right now,
I know there's no reason supply-wise and global growth in question with what's happening in China, but you know what? It's become so one-sided. I really wasn't planning on this being a crude seminar, but I've never seen the Middle East have more wars in my lifetime, have a major power, a few major powers involved in it, and even the fundamentals are, well, Saudi Arabia needs money, they're going to have to pump, and Iran's back in the market, and they're enemies, and trying to break Russia and all of that. One geo risk that people don't talk about is, what about a supply disruption? I mean, the Saudis are not as firm as they were under the old regime. I've never seen the Saudis in my lifetime be this militaristic. They're putting together coalition of forces, major military exercises. They're talking about going into Syria. I've never seen Turkey and Russia at each other's throats like this. And all it's going to take is a mistake militarily to hit some infrastructure in the oil market to have a rip-roaring rally. So I think that the market is discounting the geo risk. That's really, with the war cycles I get from Armstrong and all these other guys. In the old days, people were always worried about supply disruptions out of the Middle East. No one is worried about it, and there's never been more evidence to be more worried.
Maybe because I think that they know that there's other there's elsewhere to pick up the slack in production if really needed to. But here's the thing. I hear what you're saying.
You're a Marine. You're a Marine. Have you ever seen the world in this shape, Blake? I know we could talk about trades and everything, but you're a warrior, not just in the markets, but you were a true warrior. And I know that you pay attention to politics and geopolitics and military issues. Have you ever seen the world in this condition? I mean, there's times I'm watching TV, it looks like Revelations to me.
When you get crude oil prices down here at these levels, I think the risks of some sort of backlash in the Middle East or maybe even Russia becomes quite a potential risk. But I also have learned over the 20+ years I've been trading the markets is those types of things, they are risks, and you always have to keep them in mind. But you can't trade on them.
You can't trade on them.
No, because if you do, if you're like, here, Russia's going to war and they're gonna invade everywhere, and if you've been thinking that for the last year, you've missed out on a lot of great trades. So I try not to. I keep those ideas in my head, but not to prevent me from taking advantage of what I see develop in the markets. But I think everything that you say or you've said should be noted for sure.
Okay.
Now,
I just got out of my group. You convinced me. I'm getting out.
Come on now.
Go ahead.
One of the bigger developments that I think, this was the dollar yen, and this is I shorted the dollar yen along with a lot of people right up at the 121 level. I think 121.50 is where I was short, and I actually closed it out before we hit new lows here, and then I reshorted again, and so I shorted it twice on the way down, both with really nice gains. And the thing about the dollar yen, and I think that everybody should be aware of, is the reaction that the market gave the BOJ when the BOJ induced negative deposit rates. Now, you and I and everybody else, we go around.
I've never seen central bank gains being given away so quickly.
Well, the thing is that we could go around and around the reasons why, but I think one of the reasons why is it was more symbolic than anything. If you look at the Swiss National Bank, deposit rates of -3/4 basis points, and the Bank of Japan moving them literally 1/10 of a basis point into negative territory is more symbolic. It really wasn't enough to shift, assets away, from the yen. Yeah. If they would have gone in a deep negative territory like the Swiss National Bank, I think the outcome would have been a lot different. We would see the dollar yen trading well into or close to new highs. But because it was more symbolic than anything, we relinquished those gains. But what that also signals to me is the lack of I want to say trust, but I don't think trust is the.
How about all these
confidence
central banks from going from omnipotent to the emperor has no clothes?
Exactly. That's a great way to look at it, where the market does not respect the moves.
Fade the central bankers instead of don't fight the central bankers. It's now moved to fade them.
Fade them. We don't believe it. We don't think they can. They're running out of bullets, and that lack of confidence in whether it's the BOJ, heaven forbid it ever happened to the FOMC, but when
it is happening to the FOMC
to a certain extent, especially if the Fed decides they want to cut rates, and that's where you're going to start to lose a lot of credibility with the FOMC. But right now you can see it in the BOJ, and the market is actually showing you its hand, and I think it's really key, and that's why yesterday I shorted the dollar yen when it was in the 114 20s to 30s, and I already got out of it. But any move back up to 115.50, this is a neckline break of a big head and shoulder pattern. Right. Most people are very well aware of it. It targets back down to 105. You do have to, and I had to make sure that everybody this morning was very clear when I was talking to our normal webinar participants. I have several hundred traders that were listening in. I'm like, you have to be aware that the BOJ could indeed
put their money where their mouth is?
They could do some sort of intervention, which I've watched the BOJ intervene since early 2000s. I've been watching them for, like I said, close to 15 years with the BOJ, and they may intervene, but I think that their intervention efforts will
fail
be
again.
faded. They'll be faded again. So even if the BOJ intervened and we spiked up 100 to 200 pips, those, in my opinion, are opportunities to sell into strength into the dollar yen or buy yen weakness. One of the best charts out there, I think, if you look at the dollar yen, you go, well, that's just silliness. Go to this. Yeah, go to the 6J. This is the actual yen currency. All right, this is the futures contract.
It is in futures. This is how it's lined.
This is the 6J in the futures contract, and one thing that we've done, and what I thought was really interesting, is we've broken some major downtrend lines. These are these are the things that probably worry the Mark Cubans of the world or the Kyle Basses of the world, where they say, wow, I've been aggressively short the yen, for the last couple of years, and I'm seeing it go against me. Now, I am also a firm believer, and I have to throw this out there.
Mark Cuban bought the top in gold. He bought calls late last week.
Oh, did he?
Yeah, he should stick to eating popcorn at the Mavericks games.
Well, he's also he converted everything to yen out of yen. But way back in 2012 when Kyle Bass, everybody was George Soros, everybody was on this trade, on the short yen trade, and it's been great, and it's been a great gravy train, and I have to say that I am a firm believer that the yen will get weaker at some point. And I believe that Japan's demographics are completely messed up. You got farmers that are, the average farmer is in the 60s in Japan. They've got a huge problem that they're going to be dealing with for years to come. So I think the yen is going to be a great short. I just think the market is poorly positioned at this point.
I'm 62 now, Blake. I sold my tractor.
Yeah, could you imagine Dale getting up every day and working in the fields? I mean, that's the way Japan. I
have a tough time with my commute, one bedroom to the next. I respect, and I couldn't do it. I wouldn't have the strength to do it. So it's the bottom line here, Blake, that the only thing that would change the picture would be to negate the breakout. U.S. dollar yen 116 closes above it, might change the picture. Until then, you just have to go with what's going on here until we get targets.
Exactly, and I believe that we could get spikes above 116 in the dollar yen, especially if the BOJ decides they want to intervene. And I think it's possible, but I think you use the key term that I love to use, a close. You start looking for daily or weekly closes above 116. That would negate any view that I have about the dollar yen. But right now, as long as we stay below that 115.50, which I think is very important, we stayed below there on a daily, weekly basis. I'm going to target the downside till we get towards the 105 yen level.
Well, then I'm assuming that you're looking for 1,800 S&Ps to be taken out with your view on gold, your view on yen, your view on crude, the S&Ps. There's got to be a ton of stops, even though they took out some of those stops, I don't know, a month ago before the recovery. That should probably fail from here if the yen is going to targets, right?
Well, whether you like it or not, or whether anybody, again, it's telling people not what they need to hear or want to hear, but kind of what's happening. Now, bottom line is we made a lower. Technically, the damage is done. We made a lower low in the S&P futures. So by doing that, automatically you're putting the downside momentum in play. We may be getting a bounce right now. This is also Tuesday, which we could get a turnaround to anyway. But I look at the S&P and I've been a long-term believer after this 161% extension. I've vlogged about it, on pipzar.com. We got this 161% extension. I believe that we're correcting, and after 6, 7 years of easy monetary policy, the market is consuming that easy. It's digesting it, and I say this all the time, and I've said this for the last 6 months or so. When rates go up, which they're currently rising, and even though people don't think that the Fed's going to continue to raise them throughout the course of the year, I really think the economy is going to be okay. The economy can take another half a point rate hike, another full basis point rate hike over the course of the next couple of years. It's not going to affect the economy. It's going to put a recession in asset markets. You talk about homes, stocks, anything that that has gained from the Fed keeping a zero interest rate policy for so long. That's what's going to suffer. And so the S&P coming down to 1,600 is not going to be a tax on the overall economy. Your McDonald's workers aren't going to feel it. Your people that are doing normal jobs and don't have huge exposure to the stock market, they are not going to feel the pain of rates moving higher.
No, it's the one percenters.
It's the one percenters, which you can see from the rise that we've seen in the stock market, in asset prices like homes. They are going to correct a little bit, and it's not I'm not sitting here looking at the S&P saying, oh my God, we're going to go see 500 again. But I think that the S&P coming back down to 1,600 to a 38% retracement, that is not
previous double tops at 1,550 or so.
Exactly. It's not uncalled for. It's not it's
normal.
It's a normal correction in a what we could look at as an extremely bullish breakout in the stock market. And so for me, I look at it as a great opportunity should the S&P get back down to 1,600. I think there's going to be a lot of great buying opportunities, whether you're talking about Netflix or Tesla or Chipotle or whatever stocks that you guys are looking at. I think there's going to be a lot of great values down there because they're going to take a lot of the air out of the high beta names in equity. So
they're doing
the FANGs, exactly. The Netflixes of the world and the Amazons. Those stocks need to correct a little bit and they need to pull back, and it's gonna provide us a great opportunity. Now, if that is the case,
I hear the birdies outside your window, buddy.
Yeah, we have I don't know if you know this, but in Phoenix and in Scottsdale where I live, we have the African lovebirds. They've been taking over North Scottsdale for the last 20 some odd years. They apparently got out.
I thought they were on the Grammys last night.
No, but the Grammys was pretty cool. But no, we have the green with red head and beautiful lovebirds, and they live in our saguaros. They're from Africa, but they'll thrive in our desert climate here too. So yes, I feed them every morning.
You do too, Blake. I couldn't do it anymore. It's gonna be 88 here today.
Oh my gosh,
desert climate. But I'll tell you what, Blake. I really appreciate you coming here, and what I love about talking to you is you let me ramble and we can talk about everything, and I end up with views that I didn't have before our talk. So why don't you tell the community how they could participate in your Morning Edge shows, show your website, or how they could how they could learn from you, because Blake, every time we talk I learn from you.
Well, thanks, Dale. I appreciate it. And you can just follow me on Twitter. I'm Pipzar, and I've been broadcasting the Morning Edge since we started in 2002. So this is our 14th year of broadcasting, and we have a great community, very similar to the LAR community. We have a great community of traders. Well, we've been doing it for a long time, and I have people that have been listening in for more than 10 years and have been. Wow. But we do it and we do it with a group, and we have 5 different analysts that are on throughout the course of the day and night. And yeah,
Yeah.
if you ever want the link, you just follow me via Twitter, and I tweet out the link. And Ziggy, who records some of your webinars here, he records them
Yeah.
for me too. He's a great guy. I actually took him to lunch when he passed through Phoenix a couple of years ago on his way to New York, and he records them every day. So if you follow Ziggy FX,
Yeah.
he posts the recordings almost every day.
He
And
got a
he
lunch
does it.
out of me too, Blake.
What's
I
that?
wonder on it. I wonder how many people he stopped to see on the way to New York for a free lunch.
He was moving
But
from Vegas
I
to New
love the
York, and
guy.
he's great. He is awesome. I love Ziggy. He's a great guy. So, but yeah, that's it. And Dale, I appreciate what you do for the community, because you really, I love the fact that you bring on so many different guests, so many different views, and and the one thing I like to point out about trading, it's not important. I think what's most important when you're trading is finding out what works for you. And the good thing about listening to your LAR broadcasts is that you get so many different viewpoints. And what I've found is to be really successful is do what makes sense to me. And it doesn't mean what I do is going to make sense to the next person. So finding out
Right.
where your comfort zone is and how to manage risk is ultimately the most important thing in the market, because that's what's going to keep you in the game, is managing your risk and finding out what's comfortable to you as a trader.
I hope pips rain down on you. Congratulations on your yen short, Blake, and some great presentations on gold and euro and crude, and you gave us lots of food for thought. And it's always a pleasure to have you on, Blake Morrow, my trading warrior brother at Pipsar. Everyone thank Blake for sharing his views with us.